Hey YouTube, Siam here. Someone asked what my average day entails, and they sort of implied that I lead this really extravagant life and I'm always jetting around and speaking at events and whatnot. So this video is for you. Yeah, the reason I'm giggling for that is because 99% of the time I lead the world's most boring life. I shit you not, really. I spend all of my time in here. It's ironic. So we live in, this is a 7-bedroom ensuite house. Yet I spend the third floor we don't even use. I spend 99% of my time in this office. I only go to the kitchen to get crisps and chocolate. There's a sort of a side question to that, which was how do I sort of fit my life around my trading? And it's completely the opposite way. Trading fits into my life. So what I do every morning, and the thing is, trading only takes me 5 minutes a day, literally no more than that. And so what I do is in the morning, once I've walked the dog and whatnot, I come in here. I'm normally in my dressing gown. I try not to get changed before midday, and I simply open my screens. So let's get my charting software up. Oop, here we go. And I've got these radars. So if I just load them up, and you'll see, in fact, here we go. I'm going to time it. So stopwatch is going. So I simply load everything up. For some reason that didn't. For some reason it hasn't loaded up properly, but oh well. It's adding time. So, as you can probably see, I've got 2 sort of radar screens on the right and my main screen over here, and I simply scan my eyes. No, 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 no. Okay, there's one chart which does look interesting, so I'll have a little look-see. Okay, that's it. So there are no trade setups today. That's taken 45 seconds really. And what I then do is I completely turn everything off. So this is one of the follies that most traders screw up at, is that even if they don't see a trade to place, it takes me ages to close the software, they keep it running, and then they go hunting for trades and they start forcing trades which aren't really there, and that's pretty silly. So what I do is I just turn the whole thing off, and that way it's not distracting me, because I promise you, if you've got some trades open, your eye is going to be constantly looking at that monetary figure, as in how much money you're up or down, and it's just going to ruin the rest of your day. So once that's done, I then crack on with work. I've got a video somewhere on YouTube explaining how I plan my whole life and whatnot, and I basically, this folder never really leaves me, and I've got a get shit done page, and that's basically everything I do. So that is it. So Matty's gonna have a very boring job. He's just gonna sit there and watch me work. Have fun. So one of the last videos we released was this one here, a caution warning to crypto investors. And I was basically, I did a little selfie outside. And the reason being is that we have a Facebook, so we have a private Facebook group for our crypto investors. And so I've got a really basic cryptocurrency investing course. And the thing is, A lot of our crypto investors are making huge amounts of profit right now through cryptos, and there's a bit of a buzz going on, and that video is there just to basically tell everyone to, calm down, be very careful, and basically to reiterate that you should only use risk capital, i.e. capital which you can afford to lose and it to not hurt you when playing with cryptos. And one of the things that a few people asked after that video was, cash flowing assets and capital appreciating assets. Because what I said at the end of that video is basically, unless you're minted, so no, unless you're financially independent, you should stay well away from capital appreciating assets at all costs. I think personally I've pushed myself back probably 3 years in terms of wealth, just by focusing too much on capital appreciating assets. So basically, let's look at the two. So a capital appreciating asset is something where you buy low and hopefully you sell high. And as you can imagine, there's a lot of hope and luck and crossing your fingers and arms that whatever you've invested goes up. Things such like cryptocurrencies, stocks, buying a house hoping it goes up in value, buying, I don't know, cars, paintings, just things hoping that will go up in price, even gold and silver. So they are capital appreciating assets, or just a small example of some. And then you have cash flowing assets. Now, this is what you really need to focus on. So if you focus all of your time and effort in building up cash flowing assets, you're going to get to financial independence way quicker than anyone else, basically, who's also on that journey. And the reason being is that if you can, let's get on the board here. So this all goes back to the standard or the basic financial statement, because so up here you have your income, your expenses, and then you have your balance sheet, which is your asset box, and then your liability box. And so the thing is, if you, well, basically, really quickly, I've made loads of videos on this. Your money comes in from your job or your business into your income box. It then goes into your expenses box, where you pay for all your expenses, council tax, bills, etc. And then what you're left with is your surplus. And then what you do with your surplus defines whether you'll be rich or poor. Now, unfortunately, most people just go and spank that whole surplus into the liability box and buy stuff they really don't need to try and impress people that they really don't care about. And then guess what? Because you lost all of your money into your liability box, you're then gonna have to work a whole freaking month again just to repeat the same process. And that is basically, I mean, that process there is the rat race, where you're basically blowing your money constantly, and that's why you'll end up working till you're 80 and you still won't be retired. So what you need to do is you need to focus your surplus into the asset box. Now, I mean, the definition of an asset and liability, or the basic one which you should really adhere to, is an asset is anything that puts money into your pocket every month or every year, and a liability is anything that takes money out of your pocket every month or every year. Now, if you then put all of your surplus into your asset box and you're just buying capital appreciating assets, so basically parking your money into something, hoping it will go up, you're not really helping yourself, because you're using all of this into here, and you're still obviously bleeding money and you're still having to work. And what if those assets that you've bought, those capital appreciating assets, don't pay off? Now, as I said in that previous video, there have been so many times I've invested in something and I was like 99.9% sure it was going to shoot to the moon or go in favor, and guess what happened? It only went up a little bit, or went down, or I lost everything. So, and when that happens, it pushes you back so much in time, and then you have to start all over again. So what you need to do is basically focus that surplus into the asset box, but only on cash flowing assets. things that give out money every month or year or day. And so let's write a quick, so cash flowing assets. So for example, we could write a little list down here. So cash flowing assets over here would be things like businesses. So business, rental income. So if you have a property, so that could be just generally renting it out, or Airbnb. If you have a car, you could sort of rent your car out. I mean, there's some websites doing that at the moment. Dividends from stocks or cryptos, dividends. The reason I love NEO, the cryptocurrency, is because it's one of the only cryptos out there that pays out divvies on a daily basis, which is awesome. Dividends from stocks, etc. You could have bonds. Not too keen on them. And then you can have a debt-based asset. So debt-based. And what I mean by that is if you have some money, you can loan it out. So for example, if you go to fundingcircle.co.uk, you can basically loan money to other businesses, and you'll get, I mean, even with the churn, you'll still get about 7% per year, which is pretty cool. So they're the sort of the cash flowing assets. What else is there? You could, that's pretty much it in terms of the big headlines. So that's cash flowing assets. Let's have a look at capital appreciating assets. I mean, it could be everything: stocks, commodities, cryptos, property, land, cars, just everything, shizzle. And the thing is, like the number one thing here is that you have pretty much zero control or influence in this. You park your money into a stock or an ISA or whatever, and you're simply hoping that it goes up. Whereas over here, you have all of the control. Like it's like in business, it's all your responsibility if you win or lose in business, all your fault. And yeah, you have far more control over here. So, and the thing here, if you start doing this, and then you start investing into cash flowing assets, eventually, if you're depending what you do, it's then going to start trickling off money every month, quarter, or year, and that money simply goes straight back into your income box. And then you repeat the process, and then eventually the income from this mammoth asset box basically overcomes all of your expenses and outgoings, and then you're dandy, and then you can chill out. So yeah, that's about it. That's my little rant when it comes to cash flowing assets and capital appreciating assets. And have a guess which type of asset the general public are obsessed with. Yeah, you probably guessed it. It's capital appreciating assets, where, yeah, just really stop digging about with them. Just focus on cash flowing assets. So that's about it. Dog hasn't been out for a bit. Let's go and run the dog around. So yeah, a short vlog today. I hope that helps, and I can't imagine us being out here too long. It's raining. I have this agreement with Pips that when it rains and it's a bit shit, we don't really walk that much. She's happy with it. So she says. Oopsie. But yeah, see you around. Bye. Oh, thanks, Massey. Don't forget to subscribe, and you'll be the first to know about a new video. Cheers.